In the realm of investing, the allure of consistent income is undeniable. While the stock market can be a capricious dance partner, the promise of regular dividend payments offers a waltz of stability and a reliable source of cash flow. And for those seeking an even quicker beat, the emergence of monthly dividend ETFs presents an intriguing rhythm to consider. But before you spin into a flurry of monthly checks, let's take a measured step back and analyze these ETFs with the precision of a financial conductor. This article, your personal symphony guide, will delve deep into the intricacies of monthly dividend ETFs, covering their mechanisms, advantages, drawbacks, and potential pitfalls. We'll then explore a diversified ensemble of popular options, before concluding with a harmonious composition of best practices for navigating this unique investment landscape. Unlike traditional counterparts that typically pay dividends quarterly or annually, monthly dividend ETFs employ a variety of instruments to achieve their frequent distributions. Think of them as financial alchemists, transforming quarterly inflows into a monthly river of income. Here are the main strategies they utilize. Covered call concerto. These ETFs write covered calls on a portion of their underlying holdings. Covered calls generate monthly income, which is then distributed to investors. While this waltz offers monthly checks, it can limit capital appreciation, as covered calls cap potential gains from underlying stock prices. Option monetization minuet. Some ETFs focus on selling options contracts and utilizing the premium received to compose monthly distributions. This can be done through various option trading strategies, each with its own risk-reward profile. Imagine nimble traders pirouetting through the options market, generating income for the ETF. Equal payout intermezzo. These ETFs strive for a fixed tempo distribution, aiming to pay out a consistent amount of their portfolio's total dividend yield every month. This may involve holding back some dividends during high-yielding periods to smooth out the payments throughout the year, like a financial metronome ensuring a steady rhythm. The siren song of regular income. Advantages of monthly dividend ETFs. Enhanced cash flow. The most captivating melody is the consistent monthly income stream. This can be particularly attractive for retirees or investors seeking regular cash flow to supplement their income, offering a financial safety net like a reliable backup singer. Compounding crescendo. Reinvesting the monthly dividends can lead to an amplified return over time, potentially boosting your long-term portfolio growth, like a financial harmony that builds in intensity. Psychological comfort. Receiving regular checks can provide a sense of peace of mind and stability, especially during market downturns, acting as a soothing counterpoint to the market's unpredictable drumbeat. Beyond the spotlight, drawbacks to consider in the ETF chorus. Lower overall yield. Compared to traditional dividend ETFs, the frequent payouts often come at the expense of the overall dividend yield. The strategies used to achieve monthly distributions can lead to reduced exposure to high-yielding stocks or limit capital appreciation, like a trade-off between melody and volume. Higher fees. Due to the complex choreography involved in generating monthly payouts, these ETFs often have higher expense ratios than their traditional counterparts. Be sure to compare fees before committing, ensuring they don't drown out your returns. Tax implications. Frequent dividend distributions can lead to more frequent tax events, potentially increasing your tax liability. Consult with a financial advisor to understand the tax implications before joining the financial parade. Now that we've analyzed the music theory, let's meet some of the standout performers in the monthly dividend ETF arena. Global X Super Dividend ETF, SDIV. This ETF uses a covered call strategy and focuses on high-yielding global stocks. While offering a high average yield, it comes with potential limitations on capital appreciation, like a flashy soloist who may overshadow the ensemble. JP Morgan Equity Premium Income ETF, JEPI. this ETF utilizes a combination of covered calls and option selling strategies to deliver monthly income. It prioritizes income consistency over high yields and may offer lower volatility, like a reliable backing vocalist. Invesco Preferred ETF, PGX, focusing on preferred stocks. This ETF offers a high and relatively stable monthly payout due to the fixed income nature of preferred shares. However, it carries different risks compared to traditional equity ETFs, like a specialized instrument that may not blend seamlessly with other investments. Global X Dividend Quality ETF, GQX. This ETF emphasizes high-quality dividend-paying companies with a history of consistent payouts. While the payouts may not be as frequent as some other options, it prioritizes long-term dividend sustainability, like a seasoned performer delivering dependable vocals. Now that you've tuned your financial instrument and assessed the orchestra, let's explore how to incorporate monthly dividend ETFs into your portfolio masterpiece. Imagine them as versatile musicians who can enrich your financial composition depending on your needs. Seeking regular income. For those prioritizing monthly cash flow, consider allocating a portion of your portfolio to high-yielding monthly dividend ETFs, balancing them with lower-risk assets to mitigate volatility. Capital appreciation with income. If both growth and income are your goals, look for ETFs that offer a blend of high-quality dividend-paying stocks and moderate covered call strategies. This provides a consistent income stream while still allowing for capital appreciation. Diversification harmony. Remember, diversification is key to a balanced portfolio. Monthly dividend ETFs can complement other income-generating assets, like bonds or real estate, while also providing exposure to equities. Just like any complex composition, managing risk is essential for a harmonious financial future. Monitor underlying strategies. Regularly review the strategies employed by your chosen ETFs to ensure they continue to align with your risk tolerance and investment goals. Volatility interludes. Be prepared for potential market downturns and their impact on monthly payouts. Consider a diversified portfolio to weather these fluctuations. Tax considerations. Consult with a tax advisor to develop strategies for minimizing the tax implications of frequent dividend distributions. Remember, even the most beautiful melodies can be taxed. As the financial landscape evolves, let's consider potential trends influencing future performance. Rising interest rates. Higher interest rates could make traditional income-generating assets like bonds more attractive, potentially impacting the demand for monthly dividend ETFs. ETF innovation. New strategies and structures may emerge in the monthly dividend ETF space, offering investors additional options and risk profiles. Market volatility. Continued market volatility could increase the appeal of income-generating ETFs, including those with monthly payouts. And so the curtain closes on this exploration of monthly dividend ETFs. Like the final chord of a well-rehearsed concerto, we are left with a resounding resonance of valuable insights and actionable advice. But the performance doesn't end here. It continues on the stage of your investment journey, where you, the investor, wield the conductor's baton. Remember the lessons learned and let them guide your decisions as you build a portfolio that harmonizes with your unique financial ambitions. Here are some final notes to carry with you. Conduct regular portfolio reviews. Just as a conductor regularly assesses the performance of the orchestra, review your portfolio periodically to ensure it remains aligned with your evolving goals and risk tolerance. Adapt your instrument mix as needed to maintain the perfect composition. Stay informed and adaptable. The financial landscape is a dynamic symphony, constantly evolving with new instruments and melodies. Stay informed about market trends, emerging ETF strategies, and potential risks to ensure your financial performance remains on key. Seek professional guidance if needed. Don't hesitate to seek the counsel of a financial advisor, your financial maestro. They can provide expert insights, help navigate complex strategies, and orchestrate your investments towards long-term success. Most importantly, remember that investing is a marathon, not a sprint. Enjoy the journey, learn from each note, and savor the sweet melodies of a well-constructed portfolio. As you master the art of investment, your financial symphony will rise to a crescendo of accomplishment, delivering enduring harmonies that resonate throughout your life.